tool built by our team, but inspired by the community, looking for better data to help find better opportunities in the markets through the efforts of economic data, technical reading, sentiment data, all at your fingertips. We like to think in the long run, the purpose or the goal here behind the Edge Finder is to bring retail traders hedge fund level stuff. And it's on its way. I wouldn't say that we're quite there, but every single day this software gets better. And, that's kind of the goal. So with that said, don't miss your chance. Pick up a copy of the Edge Finder, 35% off for a very limited time. We're going to be right back with Chris Pulver just after this. Check it out.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
All right, we're back with the man, the myth, the legend, Chris Pulver. How's it going, man? Good to see you.
What's happening, Nick? How was your morning?
It was a little hectic, but I had a lot of orders I punched in this morning. And Chris, I gotta take my opportunity here while I can. Not everything is green for me, but one thing that's really positive today for me, I trailed out of SMH, which I use a trailing stop loss. I trailed out of SMH on Friday, and I literally felt like I just ran across the fire coals without burning my feet. Like it was like really, really fortunate. But anyways, I got other stuff that's in the red. I picked up a position on oil longs here this morning. What do you got going on? What's your reaction to all this?
Well, I think it found the market at its most vulnerable. If you take a look at the VIX, I mean, 2024, the big outliers that we had, which you can see today immediately, like the market is retreating, but like the VIX was up 45% at one point. There's your December 18th VIX, and there's your August 5th. This is the type of stuff where it's like you can clearly tell when the market is vulnerable. It's over the weekend because the futures market were just tanking overnight, and a lot of that was attributed to like the Chinese AI Deepseek, right? That's where the markets were taking the biggest hit. We were down 2+% in the S&P, almost 3+% on the Nasdaq. Now we're starting to it's like everything's red. Everything's red. I don't even have feeds on the percent change right now, which is weird for TradingView. One thing I did notice was interesting though. Equal weighted S&P, not even budged. Equal weighted Nasdaq, a fraction. So Q's way down. What I like is I had a lot of trades in for the last like 2-3 weeks that were basically up here for sells and down here for sells, and this little move today is looking a lot better for my profits to be rolling in. So I had a couple trades close out for profit already, and grabbed a nice little winner on the SPX today. I'm putting in some income trades where I'm basically doing like a trap. So I'm going to give this thing lots of flexibility where, look, nobody knows what this market wants to do. Is a little competition from Chinese AI enough to break the U.S. stock market? Probably not. So I think this is a bit of an overreaction. But the fact is how we got to these recent highs, how the S&P got to those all-time highs, I was a little skeptical that we would sustain that type of like gap higher. Mm-hmm. But part of me was like, are we just going to have like a bubble this year? We're just going to have like a straight up melt up, and everything that Trump says and does is just like everything's great for the market? Maybe. But then today's a little dose of reality where it's like, okay, we do have some technicals. We do have the market that actually cares about some volatility. And you can clearly see how price sensitive things are. And this week, we got a ton of news, man. We've got earnings that are heating up this week with Mag 7 stocks. You've got Tesla, Microsoft, Meta, Apple, Visa, MasterCard, Fed on Wednesday with a rate that's not going to change, but what's the Fed going to say? And then Friday's PCE. So all those things will play into volatility this week.
Big thing there too, Chris, about just the tariff stuff, right? If we think about the reaction to the Colombia situation, I think that actually told you a little bit about how it told you two sides of the story. It told you how quick on the button Trump is going to be with it, which I think is the point here that is big, because Trump being quick on the button with slapping tariffs on anybody who gets in his way could potentially make the market. I think that was an initial reaction by the market, like, oh, so that first read on tariffs are going to be slow and steady rather than all of a sudden, well, it introduced, I think, just a little bit of a, well, they're still very much real and potentially inflationary, and that could come at any second. And trying to predict it or getting a rollout plan from the Trump administration might be less clear than we thought. So doesn't necessarily mean that like you said, this might not be the top of the U.S. stock market per se, but it does reintroduce some risk to uncertainty of when tariffs could come into the picture. The Chinese AI stuff as well, of course, is a risk to valuation. You can see there's some, as you mentioned already, some distributions here across the market are not even in terms of returns today, right? So you have SMH down a whopping. The last time I checked, it was down. Yeah, look at this, almost 8% down here on the day. SMH. Yep. You take a look at XLK, right? So the challenge here today is tech stock valuation is what is under scrutiny right now. Right. You have like, okay, all this money going into U.S. large language model stuff. And is it real? Is it not? I don't know. The Chinese AI stuff. How valid is their software? Is it piggybacking? I've heard speculation that it's piggybacking off of ChatGPT and US stuff. I've also heard that there's been third-party audits that have validated a lot of the stuff that it's doing. So that's where I think the market's just saying, who knows how real that AI model is, and if it is real, it poses a serious question to certain things. And final thought on that individual name that I think could get oversold on this news would be Meta, and the market already figured that out because I think Meta was like, who benefits from more competition in AI? Meta does, right? Like it would be better in their picture for U.S. AI, companies and distributors and chips and all that stuff. If there was more competition, prices could go down. That's just straight up better for those who are using AI and leveraging it, which I think Meta currently is like the best stock in the market doing so.
Sure. And look, there's always going to be winners and losers. I listened to a lot of content this weekend, and somebody I followed for a while, Jordy Visser, who used to be at Weiss Capital Management. I was just doing like Jordy Visser Labs. He is big on like AI agents and big in the Deepseek, and he was talking about how amazing it is and that he's been using it. Yeah. Which I'm like, okay, cool, but I don't know what to make of that outside of the market's got to get out of its own way and it's got to grab the story again, right? Like 2023 was like Mag 7 recovery that led us out of the 2022 bear market. 2023 carried into 2024, which was now we have AI potential. Now we have semiconductors and NVIDIA, and then market cap just got crazy high concentrated. So are we going to rotate away from Mag 7 into small cap AI? I mean, I don't know. And so I'm not really sure where to be throwing tons of money because I don't know what the story of 2025 is yet. I think we just have a volatility story, and I'm trying to make some sense of things. But I just look back at, we've had a 2.5-year bull market after a 15+ year bull market. I just don't think it's going to be the easiest melt up. And if we have a melt up, we're going into another bubble. I think you and I talked about that offline. Mm-hmm. That's where I'm at this year. Is a lot of defined risk, a lot of playing some income games, and just try to trade it as safely as I can. I don't have anything that I like that's like all in. I think gold's a good play, silver's a good play, Bitcoin with protection's a good play, but you're going to have a lot of volatility in tech. Because if who knows, like could everything tech and Mag 7 be disturbed? Like if Mag 7 doesn't perform this year, it's 30+% of the entire market in the S&P. So with that concentration, it is going to drag the market down. There's nowhere to hide. If you have like the entire 30+% of the largest companies in the world that are struggling or getting repositioned, like it's going to be an ugly transition as people get out of Mag 7 into other stuff. So who knows?
While you said that, Chris, that made me think of something. If we could switch to my screen for just a second.
Yeah, sure.
Let's do a study. Just as you were kind of saying that, it made me think, okay, let's look at a day. You said, what's the theme for 2025? Well, let's just take a look at today. I like to actually look at what the winners and losers are of the day. You mentioned winners and losers. Well, let's take a look at some sectors. So today we have the consumer staples up. That makes sense, right? A little bit of optimism for a place in the market that has been very depressed here recently. Healthcare is also up yet again. You have regional banks up, with yields kind of falling. comm services up. Real estate is modestly flat. Financials flat as well, XLY. So these days can be kind of interesting because it can tell you where the market's kind of feel is. And it seems like the most heavy hit are tech, right? Semiconductors. And here's an interesting one: utilities. Utilities getting hit off the back of this because, again, a less demand for or a changing landscape for the AI trade could also hurt utility companies, which have a lot of their earnings calls, a lot of their hype has been around, well, utilities could service that industry. That's a known, right? If there's a bigger demand for energy, and the power companies could do quite well in that. Technology also down 3.6%, industrials down 1.4%. So, your winners today are consumer staples, healthcare. These are kind of exactly what you would expect, but then regional banks, comm services, and real estate. So just wanted to point that out because sometimes it can be interesting to look at that divergence. You also have, on relative strength, you've got European stocks doing okay, which are more banking centric, more value centric types of companies, whereas US is innovation and growth. You also have Germany kind of flat on the day, Japanese stocks down as well. So just taking a full look, and maybe here is one thing that I'm attracted to, Chris, is look at the Russell. The Russell in all of this is a winner. Through the full year so far, Russell has been a winner through January, to many people's surprise. So maybe to your thought of like, hey, we've had a melt up here event for the last few years. What's the landscape look like? Well, maybe S&P and Qs kind of take a break here this year, and you see some final resolution, so some conviction to the Russell trade if yields do in fact fall and you get inflation kind of falling down. Who knows? But I actually think that the Russell still looks good for 2025 personally.
Yeah, in fact, let me take a look at that. I just put a trade in on Microsoft. That is a 417 expiration. I'm just going to get that added in for a Pulver alerts here. Just give me a second. So 417 expiration. So another income opportunity on Microsoft. I want to take a look at IWM right now since we would have had a gap lower on that one. Is it enough? I mean, it really didn't budge. Yeah, I was going to say if it was back down, I thought we were gapping a little bit lower on IWM, but we didn't. I mean, the Dow, same thing. So Dow is right there, like not even budged. S&P not really budged. Qs and S&P moving the most. Dow and Russell not really moving. So shoot, I was just thinking. I know I have some trades running on IWM. It's a March and May. These are 1-1-1 trades. So it's an income trade. I mean, if it doesn't end up getting back down to like 190 or 190 for March and May, then I just collect the income. I do have shares that I own IWM at 200. My cost basis is already down to like 192, but I have a covered call at 225 that I'm not really doing anything with right now. I might just hang on to it a little bit, but I have to dig a little bit deeper in the portfolio today. Look at some rolls potentially. I know on NVIDIA, because we had a huge gap to the downside today at 124. Let me check on NVIDIA. I have a couple of collar trades running, and I know on 3 accounts in particular, my NVIDIA debit should have been, let me go to NVIDIA. My NVIDIA, what's my ownership? It's like I own it at like 130. I just need to find my tracker here. Give me a second. There we go. Okay, so 130.08, but my debit on the 125 put is $4.20. So let me just take a look here really quickly. So there's my 140 by 125. Now, what I want to look at here is what is my 125 put trading for? Right now, it's already up $765, which shows that I got in for 415 to 420. But if I close this, okay, I can close this for a nice fat profit of 1175. Let's just do the math on that. I can lower my cost basis of NVIDIA and reestablish my collar trade. I think I'm gonna do that right now because that big jump and that big gap, I think that NVIDIA could still go lower, but this is gonna be like an immediate reaction to it. So if I have 1190 minus the 415 that I paid for it, I'm lowering my cost basis on NVIDIA by $7.75. Well, that puts me down to 123 ownership wise, which is actually right at current price. I can still do another collar trade. So let me see if this is worth rolling either the entire thing, or I just take the profit on the put side, close out the call side for some partial profit as well. This is the stuff I'm gonna have to be doing today. So my my covered call at 140 is already up $1,000.
Yep.
So net on this position. I don't know if I could roll this, but let's find out. If I roll this, I think I want to roll this like down, and that would allow me to close out the 125 by 140 for profit. That would allow me to roll for another. I don't really want to roll it by another 20 days though. Let's see here. So I think, I don't know. I don't want to like talk through this and bore everybody, but this is stuff I need to take a close look at, because by the numbers, I have profit on the long put, which was my collar trade, right? So I've got the sell call and the buy put, and with a big move like that, I think it's worth looking at protection and taking some of the trade off, and then reestablishing the collar that I think is fair based around a current break even.
Yep.
So I'm going to do
I
that
like
on
it,
a couple
Chris.
of
And I've been saying this. Don't even worry about it. If you have to chill and place trades, I got you. I had someone step in earlier. James joined the stream because I was like, dude, I just got so many trades I got to play. So it is a busy morning. I just took a long position on the S&P 500 also. I'm still keeping some cash on the sidelines, but I'm going to be, actually, let me just change this 4 hour. Let me change this visibility. Let's do current interval and above. Yeah, liking the reaction here on the S&P 500, real long wick. And he said it earlier. I don't necessarily think that this is the piece that crashes the market. A little competition in the AI trade. So I'm still, I've been cautiously bullish for some time, but I like the risk reward here. And if we take out those lows, I'm going to take a loss. It's not a huge position, but I've got it running here. I'm going to go ahead and punch this into our VIP room. Chris mentioned it earlier, but you can see all the trades that Chris and I are taking within the Pulver alerts and VIP service offered by A1 Trading. If you'd like some information about that, we'll drop the link to chat directly with our support team in the live stream chat. You can speak with our team there. Someone from our group can get you set up with all the information on trades that we are taking and why. Like I said, I am going to take a quick trade here on the S&P. Let me see, new trade. So bear with us, guys.
Yeah, while you're doing that, Nick, I'm doing the same thing on mine because I put an income trade in for Microsoft.
Okay.
So I've got that posted as well. I'm getting it posted right now.
Nice.
Last week, I also put on some trades on SPX, which is looking really good right now, actually.
It's real strong, yeah.
So I'll get this put in.
Yeah, I mean, the thing is, it's one of those things. You said it earlier. Do we have the recipe for an obvious melt up this year? I would say no, but we still have a bull market. We still have demand for stuff. You can see it today. I don't care to buy the absolute bottom of this dip, but that is a quick bounce off of that. It looks really strong. So I'm just gonna, put a stop loss below it, and if it doesn't work out, it doesn't work out. Let me just update this here in the group. So my entry is around 6, and I closed out my trade from last few weeks, trailed out of that this morning. So I'm just kind of re-entering that idea at a lower price. So let me see, stop level here, 58.99. I'm just going to type this up here. So let me do this. So very strong bounce off of key support here this morning. I personally believe the Deepseek AI fears are a bit out of proportion. A little competition may actually be a good thing. And I don't know. Again, nobody knows for sure how real, how strong the AI stuff out of China really is. There's like I said, but I think that perhaps, as often is the case, markets are selling now, asking questions later, and the fear may not actually match the reality of it. So I've got to stop in on this trade. If it doesn't work out, it doesn't work out. I'm still long Bitcoin. This is also bouncing very nicely here this morning. Held support, but it was messy. You can see we came down to this area here around 100,000, dipped underneath 100,000, but buyers came back in. So the reaction here this morning, I would say, is pretty good across a lot of risk assets.
What this does leave us, though, this leaves us with a potential island candle, right? So this week, with all the volatility that we could have with some of the earnings, the Fed, and then inflation data, the market might decide to stay somehow inside this, giant like gap, and we might have the market's inability to find the highs or the lows, but we just kind of stay inside this area,
Mm-hmm.
or this is just enough to kind of sit here and justify like, okay, hey, this is a dip. Everyone's excited about buying the dip. This is a gap fill that we filled finally, 3 gaps to the downside of the 4 that we established after CPI, and
Yep.
3 of them got filled today. So we have a bit of an island gap, and I'd say the bulls or bears. If the bulls can overtake that to fill the upside, then we know that it was a buy the dip kind of week. Also, look at this just from a clean technical standpoint. If I'm right in this channel where this was a high, the market has pulled right back to it, right? And I said
Yep.
this last week. I said, look, we could have a halfway point where the market's now going to justify a bit of a dip to buy, or this is hit the highs, hit the lows, and the market just comes all the way back down. But if we're reacting off that halfway point, filling some of those gaps, right now it seems like the market is a bit of a buy the dip. But again, I would put a lot of caution out there for like buying the dip with just crazy aggressive toss money at it. That's like, I can't guarantee a bottom here. There's nowhere even close to it. We're still
Sure.
not at a discount that I would say I'd want to be putting a lot more capital on the line. I'm still sitting around 40 to 45% cash. I did have about an $18,000 P&L swing today in my favor. So I was down, 20 grand this morning. Now I'm only down $800. So that's a pretty nice swing.
Wow, that's phenomenal.
Yes,
It's a
I
lot
mean, I
more
really don't
Friday.
have a drawdown. I don't really have a drawdown at all today, which I'm
That's great.
obviously very happy with. So
Yeah. I'm
we'll
down
make sure that plays.
1.75% today, which again, considering I got out of my SMH trade,
Mhm.
and actually just by the way, just a second ago, re-entered it. I got out of the way of it. I'm buying back in. Had I taken the full loss there, that would have made my day a lot more red than it was. So,
For sure.
and I'm sitting on some really good gains here recently. So we'll see how it plays out, but ended up trailing stops saved my butt here this morning with that SMH, because of course dropping over the weekend, right?
Yep.
7.4%. Again, I'm just gonna put my money where my mouth is with that Deepseek stuff. I think it's a little overblown. I think the market's trying to figure it out and selling first, asking questions later. I think once you ask some questions, there might be like okay, did China really just beat us on a $6 million budget? I don't know. I think there's a lot of smart people in America that would say there's some holes in that theory.
Yeah.
Unless the Chinese are just, but if the Chinese are so smart, why is their stock market just devastated? And again, I still think the Chinese stock market has upside, but it's not like they're just leaps and bounds better than America on AI, in my opinion. We'll see if I'm
Right.
right. Could be wrong.
The on that side though, I mean, I was looking at the China stocks this morning. They are all up for now.
Yeah.
I mean, and there's a
Oh, they
lot more to
probably love
prove.
this.
There's a lot more to prove, right? That you're fine. But I think for the healthier global economy, look, China being up, it shouldn't be like U.S. versus China. It's like the global economy will benefit from both countries doing well.
I
But we're
saw
always
something
frenemies, right?
interesting.
We're always frenemies. We can't have we can't be in cahoots and like, oh, China's doing well and the U.S. is doing well. But if money supply is pretty consistent, if there's another round of stimulus coming in March for
Yeah.
China, not just an AI play here, not just like they're undermining the U.S. and it's like now the U.S. is down and China's up. Look, China has been like everyone's calling it uninvestable, which I don't agree with. I just think you've got to pick. You just got to pick
I
high
think
quality stocks that are just beat up and give them a
I
chance.
agree with
But
that.
look, I've taken paper cuts along the way from Alibaba and Baidu for the last year or so. Had a big pop obviously in September last year. Had some follow through that allowed me to get out of some of that exposure. So now it's pretty concentrated. I mean, JD, I'm looking at turning like $1,000 profit on JD, Alibaba and Baidu. I mean, I've got some diagonal spreads and some longer term plays on those, and I have some shares. So, I mean, I'm getting some upside on these, which is fine. There's still a long, long ways to go. And also, Alibaba and Baidu doesn't necessarily mean AI. It's just like, okay, if China's looking better, like those would be one of the few stocks that I would be considered like safe to trade.
Yeah.
Yeah, but I don't think that China, that all of a sudden undermines the U.S. is going to be like, okay, China's up, U.S. is down. It's like I think they both have to do well for the overall broader global economy to do well. The one thing that's been surprising me has been the DAX. So it's not the Dixie, but the Dixie's down, which is totally fine, and that's also pulling U.S. 10-year down as well. But the
Hmm.
DAX has been really surprisingly bullish.
Yeah.
And I would say I would almost look at this and say I'm a little skeptical on how much higher this thing can go because we are stretched a long ways away from that 200 moving average, and that blow off move we had since a little dip in December of last year. I don't know. It's a weird stock or a weird index. I mean, this is FTSE did the same thing for the UK. We had a big blast off move since the lows in December. There's the DAX with that little pullback in December, and it's just been ripping higher. I mean, it's outperformed the S&P since that dip in a big way. So
Yeah.
anyway, a lot of stuff going on, but there's
Well,
some non-US flows, that's for sure today,
I think that the
especially.
China thing, Chris, too, is actually I'm actually feeling pretty positive about China for 2025. And obviously, it's a little easier to say that when Chinese stocks are up for the day. But I have been in that camp here for a while. I know you and I have talked about playing around with China stocks for a while, but
Yep.
and I've definitely been early to that idea. However, you listen to Trump talk about China, he seemed pretty soft on China last time he spoke about them, and that was pretty big, I think, for a lot of the hopes that, hey, maybe China versus U.S. is a thing that will work past in years to come, rather than escalate. I mean, he seemed way harder on, in my opinion, from my reaction to that thing we listened to together last week. He seemed way stronger on EU and Canada and Mexico than he did on China and Russia. And him and Putin have been sending each other love letters recently, like speaking positively about one another when asked. So, Putin dropped, he said, he basically said something very positive about Trump, and Trump said positive things about President Xi and Putin. So who knows what's going to happen there if that materializes to anything. But what that signals to, I think, me and most investors would just be, well, they both seem like they want to make a deal happen. And if that happens, Chinese stocks, US stocks, they don't have to be enemies necessarily. They can actually kind of coexist, and maybe Chinese exposure is a nice diversification thing for a year like 2025, where Chinese stocks have been crushed for so many years. US stocks have been ripping so much. Maybe there's a mean reversion between the two of them.
Yeah, and not only that, but some of the just wild stats are the US stock market has outperformed the world by like 3 standard deviations. So I mean, anything that's if you're going to where, like, it's the Wayne Gretzky thing, right? It's like, go to where the puck is going to be, not where it's
Right.
at. So it's like, if there's money that's going to be going to asymmetry, it's not in the US.
Yeah.
Like, we have had a ridiculous run, and getting out of 2022 especially. I mean, the indexes alone went up like 70 to 80% from the bottom in October 2022 to now. You look at the valuations that we have, we are historically hitting some high levels that we haven't seen in the last 30, 40 years. And when we did hit those valuations, the markets weren't great. So if money is going to flow into asymmetry opportunities, it's not in the US. So it is in China, it is in Europe, or it's anywhere. I mean, it could be anything emerging market, it could be anything small cap, it could be anything where it's just, you got to diversify a little bit. So I think that the scary dark cloud over the market is like 30+% in Mag 7. That if that crumbles or just gets a little flaky, that's enough to make the S&P go nowhere. And then there's no opportunity unless people are leaving Mag 7 and then allocating elsewhere. But like I said, I think a non-US allocation is good for diversification. We've talked about energy a lot, but energy is, I don't know if it's a good play or not. Like Trump, I mean, we listened to him like, I'm really disappointed that the Saudi Arabia didn't lower oil prices. It's like, doesn't really work like that. You don't just tell the Fed to lower interest rates. You don't just tell, Saudi Arabia to lower oil prices. Like there's global forces at play here. But again, you can say one thing and the markets do what they want. So I'm actually, so you reestablished SMH this morning. You did? Yeah.
Yep. I just got back into it.
Okay. Do you have anything on SOXX at all? In the same
No,
space as SMH? No.
I
Okay.
don't.
Okay, because I think SOXX is a
Less
little bit.
less concentrated on Nvidia. Yeah.
Yes, it's less concentrated. Also has a lot more like infrastructure, like AI infrastructure plays. But
Mhm.
is this also? I'm just trying to think. Like, I'll do some research on this. But are we getting the immediate reaction because the U.S. was so caught up in like LLM, and all of a sudden this is like, well, all that's irrelevant now? Is that kind of what this Deepseek is showing? It's all just, it's open source, and for a fraction of what you're getting, like these co-pilots and chat GPTs and other thing for like $200 a month that are now like 90% discounted. That's what DeepSeek is kind of showing us.
Yeah,
Okay.
seems like it. I mean, that's the worst case fears, right? The fear
Yeah.
is like, oh, for. But I saw something, Chris. This is just a side note. I saw something that someone had posted somewhere where it was like using the DeepSeek AI thing. It asked a question and it accidentally said like The user asked the question, "What model are you?" and it responded with ChatGPT initially, and they changed it later. So that was like a little bit of a speculation. That's what I mean by like sell first, ask questions later. Like, who
Yeah.
knows how
Yeah.
real that is, or how
Yep.
it's just hard to call.
Okay. I'm going to take a look at SOXX and see. So we had that big flash in August. If I could do some type of creative income trade here, if the IV is high enough, I could get something back into this area. I'm a little hesitant to say I want to throw money at it. Like, hey, I'm willing to own the shares, but I think I could have like a high probability income trade that would unlikely have assignment. I mean, this could be support, resistance, and the reaction today is that we come down to, let's say, 210, and then we come back up and fill the gap, and this is just a bunch of noise. But if I had something where like 190 or less would
Mhm.
be any type of ownership, I think I could repair this. Let me see what a 30-day covered call looks like. I'm always testing that type of stuff. We do have decent expirations. They're not weekly, but I could go monthly. I don't love that, but at the money, I get like $6 to $9. I think SMH might actually be a little bit better to trade, but SMH is way more concentrated in Nvidia. There's
Yep.
better
You're taking
expirations here. Here's 32 days out. Yeah, get $10 to $11. Yeah, I think I'm going to take SMH. Let me see what I can look at here. So SMH, take a look at that August low from last year. And August low around $200. Anything less than that would be fine. So anything under 200, I might start my bear put spread there, do like a little trap trade. Let's see if this credit looks okay. So 200 or 200. Okay. So let's see what the premiums look like. They might be okay. They might be garbage, but we'll find out.
My first stab on SMH here. I'm playing it a little differently than you, Chris.
Okay.
I am just going to. I straight up bought the shares. I guess I could, if I wanted to get fancy, I could sell covered calls on them. But I'm just gonna play it from a simple stop loss position. I've got this entry here around support around 240, 241. My bet, my speculation, I am speculating here, is that I think that this is a little overdone. That I think that this is not necessarily a China just completely surpassed us in the race, came
Right.
out of nowhere and passes. I don't necessarily think that's the case, but I could always be wrong. That's why I got to stop on this idea. So basically, if we break through this level, I'll stop out around 230 and probably would try again down in the 215s. So that's the way I'll play it. As I'll play this zone to zone. If we bounce, great. I'll look to try and take these things back to the highs once more and trail a stop behind it. And if we fail out, if we completely are actually going to see some larger selling in the SMH, I will look to stop out and potentially reestablish another position down around 215. So that's my play on SMH.
All right. I've got one. I just entered it, so I will share this as well. So what I'm going to do is, I said 200 is a pretty nice spot. So I'm just going to do a pretty much a strict income trade right now, and it is. Let me just type it up in the chart. So I think we're doing an April expiration, March 21st. So I only have to go out 53 days, which is okay. So I'm going out March 21st. March 21st. All right. So 3/21 expiration. I'm buying the 200 put, and I'm selling the 195 put, and I'm selling the 190 put. I want to say those are the right legs. Nope. 215, 210, 200. Okay. 215, 210, 215 by 210, and I'll explain how this works, and then a 200. So if I do take any assignment on this, I got $1.13 income, so it's credit on this trade, and then I'm going to say willing to own 100 shares. So I will own 100 shares if needed, and that would be a repair trade. So if we come, actually, let me take that back. That was a symmetry trade, and I'll put in another box for my important level. So that trade would be my profit trap. So from 215 to 200, that's the trade that I'm in right now. So the way this works is I have a 215 by 210. That's a bear put spread. So that is basically, if price is below 210, I get $500 on that trade per contract because it's $5 wide. So I get that as a profit trap. And so if price is in here, this is my sweet spot. If price is sideways, I keep the $1.13. If price goes up, I keep the $1.13. If price goes down, I keep the $1.13. If price goes down into my green zone, this potentially maxes out at $6.13. So that's my max profit opportunity. The way this is going to look on a chart would be, this would be real price. there's my trade. I'm pulling in the credit here. So I've got credit, I have a bit of a trap, and then I have risk. Now I'm willing to take the risk because I'm willing to own this as an ETF and repair the trade. But I'm
Yep.
collecting $1.13 upfront. I have a $5 profit trap plus my $1.13. So this max profit is $6.13 if price is less than 210 but greater than 200. That's
There
how
you
this
go.
trade works. So it's an income trade. I mean, you'll make more money with owning shares, and if it goes up,
If it goes up, right? Yeah.
exactly, it goes up. So I'm trading the income side where it's like, look, if this thing's going to dump, I get another. I get some flexibility on that trade, right? I get some wiggle room and margin for error where this thing could drop another 18 to 19% in order for me to say, well, now I'm going to have some shares, I'm going to own it, which I'm okay with. But I
Yep.
get a lot of margin for error.
And long story short, for the audience to think about this too, when you take the options approach, I know that sounds a little bit complex if you're a new options trader, but what Chris just did there too is he gave himself way more ways to make money than I did, right? So although my approach will just straight up benefit if I make the right call on SMH moving higher, Chris's scenario has many different shots on goal, if you will, like many different ways for him to win on that trade. Even if the market goes nowhere, he can make money. So there are times for both. Chris and I both do options in our own unique ways. But definitely would encourage everybody who's listening, if you are not already in the Pulver Alert service, you can get trades sent to you from Chris. He has a full guide for users to check out to learn more about options. If they are scary to you, trust me, they sound worse than they actually are. They're not that complicated. They can be made complicated, just like everything in trading, but there's some relative simple truths about options that are quite awesome that Chris and I love to utilize. Chris, if you'd like to keep going, go for it. If you want to share some more ideas, but otherwise, I think I'm going to hop off soon. What do you want to do?
I'll go a little bit longer. Is there anybody on after me? We had
I don't think so.
Dr. Okay, we had was it Dr. Greg last week?
What Dr. Greg you're talking about, right?
Yeah, is he coming back on?
Let's see. Let's check the schedule really quick.
Okay. If not, I mean, I'm happy to run another 10. I've got another class at 11:30, so I can run for another 10, 15, 20 minutes or so.
Yeah, go 10, 15 minutes. You got nobody else behind you, at least
Okay.
from the schedule on our site.
Cool. From current price. Okay, I'll get that SMH posted in Pulver Alerts. We'll take a look at a couple others. I might look at that NVIDIA trade as well, because I think with that big flush and big gap lower, I could do nothing and just let it get protected. But because of that, quick move in Delta, and then that you got the gamma squeeze as well, that allows me to maybe reposition my NVIDIA, lower my cost basis even further, which if I'm comfortable at like the 115 area, which I am on NVIDIA, 115 I think is a good spot to be bottoming out ish, and then getting back up towards all-time highs maybe in the coming months. But anyway, I'll get that posted. So
Sounds
from
good.
current price. All right, Nick.
Hi,
Thanks
Chris, I'm
for
gonna dip. You keep going. You got it from here.
Okay. Thanks, dude.
All right, see you guys.
See ya. So that trade on SMH, I'm just gonna look at the numbers here. It is a 93% chance of profit. So we have 93% probability of profit. I have a $600 profit trap. I'm willing to take the risk on the trade. I'm only putting this on in margin accounts, by the way, so I wouldn't do this in a cash account. That's a lot of cash getting tied up in SMH. But a margin account I'm okay with. It ties up less buying power, and I can play around with it a little bit. So 93% chance of profit, which is going to be the income side. I'm willing to own the shares. If assigned, I'm just finishing up the Pulver Alert right now. If assigned, break even is, and I would take the 210 would be my $200 would be the assignment, minus 5 and minus $1.13. I'd own shares at 193.87. Okay, which is actually 20+% off of current price. So not only would we have to drop from current price, okay, we'd have to drop another from current price, another 19%, but from the recent all-time highs, we'd have to be dropping, 30+% off of all-time highs. I'm not saying that we can't do that. But looking at this high to low, if this market just stays sideways or stays, let's say, sideways this way, okay, if we just chop in this area, then this is an income trade. And like Nick was mentioning, I mean, this trade gives me about 4 out of 5 ways to make money. And even if my 5th way that I would potentially lose, I'm willing to take on the shares and own and then repair. And how do I do that? Well, if I took on the shares, I add a covered call. I can add a long put as well for protection, and then try to get it called away for $5 or $10 profit. The easiest way, to me, would be, I don't want to put a collar trade on necessarily, but I feel like I would have to. It's like if this thing is going to drop hard and then be in like all of a sudden a bear market for semiconductors because this rip is not without having some type of downturn. I mean, it would make some sense to me that if all this is doing is running from low to high, at the very least, we have a high, low, lower high, lower low. If that happens in semiconductors, I mean, anything in like the 180 to 170 zone, I would say very excited about maybe holding some SMH a little bit more. I'd still say like medium term. I'm not long term really on anything. Um, but if I'm willing to own it, I'm willing to own it. But I think we have some chop in here. I'll look for some income opportunities. The implied volatility is a little bit higher because it is so weighted in Nvidia. Nvidia is down quite a bit today. All right, but that trade it's about to be posted. Let me see if I got a picture in here. So I've got to put in the disclaimer coming in hot, and a picture to go with it. And there we go. Okay, so pictures in, SMH is in. So SMH is posted, Microsoft is posted, and we have a bunch of earnings this week. I do want to actually look and see. I feel like we have so many gaps out now that it kind of messed up my initial earnings plays as well. So I was looking more in the meat of the week on, let's say, this is a trade that I took last week, by the way. This was my trade on SPX. So SPX with a middle price around 600. So I've got a call. It's a call condor above and a put condor below. That doesn't mean anything. The names are stupid, but basically I'm looking for some income trade with a profit trap on both sides. If price stays in the middle, this only went out for about 30 days or so, 30 to 45 days. Actually, March might be 50 some days out right now. But I want to see if price just kind of stays in this range, give myself a profit trap. That trade was taken last week on Friday. I was looking at an earnings right here. So here's our earnings where things get a little bit more interesting. Um, there's some notables on Tuesday. I mean, Royal Caribbean has been just a rocket to the upside for the last I'd say 12 months at least. Lockheed Martin has been the same thing. Boeing has been beat up. It had a nice little rip there. I had Boeing in the 150 area, took it up to 170 and change. And I'm going to buy it lower. I mean, Boeing fundamentally it's basically like a government subsidy. They're like the only game in town when it comes to making airplanes. And but I want to buy it cheaper. If I see Boeing back down to like 125 or 100, I will probably buy it. Otherwise, I'm out of the trade. I don't have any exposure on it right now. I do own some shares of JetBlue. I'm going to see if this can kind of catch up with some of the other airline trades that have been going to all-time highs, like United Airlines and Delta. We go into Wednesday's trading. We have T-Mobile, which is probably one of the best looking prices for a. I mean, AT&T I think is the value play. AT&T I've had from 17 to 22. Put on some more trades to see if we get up into like the mid 20s, like 26, 27, 28 would be good profit targets for me on AT&T. T-Mobile's way more expensive, but fundamentally it looks a lot better than Verizon and a lot better than AT&T. It's just expensive. It's like $250. Progressive, that's insurance, obviously. And I do have an income trade with a ratio spread. I'm willing to own it. Same thing with Chubb, which is the two insurance plays that I'm in. Hopefully, there's just no assignment. Hopefully, Progressive, like all other insurance companies that are just sitting with tons of profit. Hang on a second. Hang on. I just had a call. Give me 1 second. If I have to get pulled off the session here, that's okay. I just want to check something. Okay. Got a class 11:30 today. We should be good. All right. Let's just finish up my thoughts here on earnings, and then I can go. Wednesday. So the big ones here: Tesla, Meta, Microsoft. Those are Mag 7, right? IBM. You want to bring out your kind of legacy tech. They're sprinkling in the AI talk. I mean, IBM stock has done pretty darn well, just on the hype. Right? Hype of this stock coming back in a big way since like summer of last year. I mean, still goes higher. And IBM since 2023 has gone up a lot. So it's up 94%, which isn't too bad for an old dusty tech company. Okay. Looks like my webinar schedule is changing. All right. Let me get back to earnings, and I'm going to go. I got some other stuff going on in class coming up in a few minutes. So Tesla, Meta, Microsoft, big market cap swinging on Wednesday after close. And then we have Visa, MasterCard, Intel, Apple, UPS on Thursday. Southwest Airlines, again, another one. Caterpillar, SkyWest, another airline. Energy on Friday, PC on Friday, Wednesday, Fed. So look, for the way that I like to trade during the week with this much volatility expected with this much of a catalyst, today and tomorrow would be, if I'm looking to make some short-term plays, today, tomorrow is my time to do it. And then Wednesday, Thursday, Friday, I would say the market is essentially, catalysts everywhere, volatility flows everywhere. Just be careful. There's a couple of income trades that I'm looking for. I might be able to trade. If we have the expected move on Tesla, Meta, I want to take a look. I mean, the market definitely had a weird reaction to start things off this week. So going to Meta, for example, which is sitting here at all-time highs again today. Somehow the flows didn't even affect Meta, where it's like, yeah, we gapped a little bit lower, and here we are to fresh all-time highs. What I don't love is this is already a huge candle on a weekly move of, okay, we've already moved 37 points, and Meta on a weekly basis moves about 35 points. So in a day, we've already made a move for the entire weekly trading range. And then we throw earnings on top of that. I mean, could Meta below earnings to the upside or downside? I don't know. I hate not taking the earnings trades because I like them just because they're like guaranteed catalysts, but nobody knows, you know. So I can price it out. I can make it pretty inexpensive, but I'll do that. And if I find a trade that I like, then I'll post it in Pulver Alerts and I'll talk about it in live sessions, my final hour session that I do on YouTube as well. But I want to get those trades in like today, tomorrow, because by Wednesday, I have to have some of these trades running to see like, okay, Wednesday to Friday, am I getting the movements that I want? Wednesday to next Friday, perhaps, given the market's a little bit more time to move. But I'm looking for kind of that immediate reaction on earnings, for better, for worse, and I'll trade it probably both ways. So if I'm taking any earnings trades this week, most likely it's going to be a Tesla, a Meta, a Microsoft, maybe IBM if it prices out the right way. And then looking at UPS isn't awful. They typically see some decent moves. Visa, MasterCard, I'm already in and out of. I'm not going to get into those. I might look at SkyWest again because I do have some exposure on that one, the ratio spreads. Apple, maybe. Maybe. So probably 5 or 6. And then the energy plays. It's Friday, so I'd have to go out the next week anyway. But if I'm doing anything this week, probably Tesla, Meta, Microsoft, Apple. Play the big guns and see where volatility sits. And then we have, like I said, Fed on Wednesday and PC on Friday. So a lot of reasons for the market to move, and that's the market. So it's a lot of stuff going on this week. I would say keep your head on a swivel, keep your eyes open, trade with good proper risk management because things could be a little crazy. I said this morning in earlier sessions, like undefined risk could be very, very costly on days like today. When you have such a big move and so little time, it will completely disrupt your kind of bread and butter trades. So that's why I tend to stick to defined risk, because that looks like a bit of an outlier type move. And we could have a lot of those. Last year we had those VIX events, and we could have more of those coming this year. So I don't think that's going to be unusual to see like high, wild volatility. But the one thing that I'm saying for today is the weekend is clearly the exposure, right? The weekend exposure is where prices, when we open up like Sunday night futures and the market rips aggressively one way or the other, that futures move can really disrupt Monday prices. We saw that happen August 5th. We didn't really see that happen over the holidays. That was just thin holiday trading where nobody was really participating. We just had a lot of swings. We had like 2 to 3% swings in the indexes over a couple weeks. It was just a lot of random, highs and lows. But over the weekends, we can see a lot of disruption with the futures market that then carries into what Monday prices do in the the indexes. So, all right, I will let you go from here. And yeah, I'll be back. I should have some more live sessions this week. Obviously, I'll be on here for A1 Trading. I'm live usually at 3 p.m. for my final hour session on YouTube. So you can check those out anytime. They're always recorded and posted in my classroom or archive or whatever for my YouTube channel. But we'll do some more. I'm going to try to find some earnings trades today. I'm just going to get caught up on my webinar schedule, and we'll see you tomorrow. All right. Thanks, everybody. Thanks, team. And let's have some fun this week. It's going to be wild. Let's embrace it. All right. See you. Bye.
Thanks for watching today's A1 Trading Show. We hope you enjoyed, and we're excited for a brand new year of trading with you. If you're new, consider subscribing for daily videos and live streams all year long. Be sure to check out the description below for our latest deals and offers. 2025 is just the beginning of our best year yet. We'll see you tomorrow.